right, a little more on the Fed, the mismanagement of the Fed, and why we need some Trumpian growth policies. Joining us now, Dave Malpass, former World Bank president, Mohamed El-Erian, chief economic advisor at Allianz, and former PIMCO CEO, chair of the President Obama's Global Development Council. There's way too many titles for you, Mohamed. But I will start with you because I'm arguing that Steve Myron was a hero, point number one. He broke through the groupthink and went for 50 basis point cut instead of 25, point number one. Point number two, the Federal Reserve, which almost always gets the story wrong with their monetary experiments, as one friend of mine put it, refuses to acknowledge the potential that the Trump plan will generate rapid economic growth without inflation, but rapid economic growth. And it's like the same old story. 1.8% growth, 1.6% growth. I don't know why they bother to print the paper, because the story never changes.
So first, let me say that it was very courageous of the new board member to dissent in his first meeting.
Yep.
And you know how critical I've been of the Fed groupthink. I'm one of those people who thinks they should do what the Bank of England does, have external members in order to break that groupthink that really has taken the institution hostage. On the second issue, I think the most interesting thing, Larry, is that they are now projecting that they would have missed the inflation target for 7 years in a row. Think about that, 7 years in a row. 6 of which they are half a percentage point above the inflation target. So this is a Fed that's not delivering, and part of it is because they don't understand the productivity potential of this country.
Yes, which came, Neil Dutta mentioned that.
And he's right. If you put in AI, life sciences, robotics, where we are way ahead of the rest of the world, we can fundamentally change the productivity trajectory, and therefore the growth trajectory, and therefore the inflation trajectory.
That's why, David, this business about Fed independence is a red herring. I don't know what they're independent from is accurate forecasting, or they're independent from good judgment. I mean, I've never understood it. And I do believe, I want to talk some about the economy with you too, but I do believe Mr. Trump has the authority from the voters to get his own central bank. That's all. I just think that's the way it works. And you know what? You and I, we might not like it if a Democrat wins, some left-wing Democrat wins, but we'll have to, the voters run the country.
They do, and Trump's policy directions are really important. They're growth-oriented. That's not getting picked up by the Fed. I noticed the more he explained today the policy, the lower the stock market went, and the higher the bond yield.
Yeah.
So Powell, the initial announcement of the rate cut, so the market loved it. The more he explained it, the worse it got, because he kept talking about the slow growth rate. Reagan, remember, got rate cuts by adding productivity, by having a very high growth target. People said, aha, I want to own the dollar, and I'm willing to take a lower interest rate on it. So I think President Trump has this golden opportunity to change the Fed into an institution that doesn't block growth. But all you saw today was this idea that each of the things that they're doing is maintaining the status quo. He was talking about cutting staff by 10%.
He's always said that.
Well, 10% is like an annual attrition rate. Yeah. So it means no reduction at all in the size of the Fed.
You know, I think when Scott Bessent wrote this op-ed piece a while back, not too long, a couple weeks ago, you need a top-to-bottom review and change at the Fed, top to bottom. Monetary, regulatory, regional reserve banks, you have top to bottom change in the workings of the Fed and the personnel of the Fed. It's a hidebound institution that's holding the economy back. And look, because of these, you're right. The more Powell spoke, the worse it got. Rates went up and stocks went down. It's a very good point. I want to put it in the riff. It's such a great point. I love that point, and we'll give you a hat tip for it. But Mohamed, you think car loan rates are going to go down now, or appliance loan, if I'm been buy a new microwave or TVs or whatever? You think those rates, mortgage rates, are they going to go down after today?
It's not obvious they're going to go down after today, because first, they priced in today, and secondly, they don't have division. I thought you made a great comment at the beginning of the show when you said the only thing now that I can hold on to is the date of the next Fed meeting.
This fax business.
Because if you listened to the press conference, at the minimum, you would say this is a divided Fed, but you would say this is a confused Fed that needs leadership.
Right.
And Dave is absolutely right. It's not the first time. Repeatedly, we've seen the market react in a certain way to the statement, and then Chair Powell starts his press conference, and there's a complete reversal in the market, and then we get the minutes a few weeks later, and people realize the press conference didn't reflect what the Fed had said. I think the key issue is that all this discussion has made two things now unavoidable. Reforms to the Fed, and I think that the Treasury Secretary op-ed was very important, and then the need to hold the Fed more accountable. And I think these two things will stay with us, and they're really important.
Agree on both. David, their neutral rate supposedly is 3%. I don't know if that's true, our start. It could be 2% for all we know. But how much more do you think, you put your economist hat on, how much more do you think their target rate should come down?
That is the key, and also what the bond yield can do. But if you say you're defending the dollar, and I believe it, as production goes up, what's going to happen is the world invests in the U.S. There's going to be this rush, which allows a lower R-star. That's academic talk for what the lowest rate can be. Why should the U.S. government have to pay these high rates? And it's self-reinforcing. If you had lower rates, we'd be refinancing at a lower rate, and it would make us even more valuable. That could start tomorrow. If the Fed today had done a 50 basis point decisive cut, bond yields would have gone down, and the dollar would have strengthened because the world would see we're on a growth track. Reinforce that with President Trump saying, well, I'm defending the dollar as the reserve currency. It's going to be the cryptocurrency, the stable coin currency, the Trump dollar. Then yields go down and the rates go down and auto loans go down in rates.
I agree. I love that, by the way, the lower target rate, stronger economy, better dollar. I think that's a great nexus. But Mohamed, this is the last one, only a few seconds. The point is, I want to see a change in the personnel at the Fed. The Reserve Bank presidents, not all of them, but many of them been there too long. They should turn over. Board of Governors, they've been there too long. They should have a turnover. Senior staff, we don't know enough about that. The public doesn't know. That's why it's such a high-bound operation. It needs new blood.
So I agree with you, and I think the easiest way of getting new blood is to press for accountability. Accountability is really important. I said it before. If Chair Powell was a CEO, he would have been fired.
That's right. That's right.
You cannot miss one of your key targets for 7 years. You cannot keep on pushing yes, it's going to be in 2 years. It's going to be in 2 years. People will stop believing you. And if people start believing you, that's a real issue.
By the way, under his management and the portfolio managers in New York, they've lost a fortune. Let's not forget that. They've lost a fortune. A couple of $100 billion in the last few years, and Lord knows how deep that portfolio is sunk.
Before they get done, I think it's going to be $1 trillion total.
It's just unbelievable. They have lost a fortune talking about firing CEOs. David Malpass, thank you very much, and Mohamed El-Erian, thank you very much. Appreciate it.